Hey guys, Jordan from Precondo here. Today I want to go through a market update for Toronto condos. It has been a while since I've done a market update video and things have changed. So let's go through the statistics. The overwhelming headline here, right, is that any discount you saw in the condo market during COVID, it's now gone. Right, so during COVID, you could maybe get condos in certain buildings for 5 or 7% less than you would have paid pre-COVID. Those losses are now gone. Now, the market is heavily fragmented. What I mean by that is some buildings in certain neighborhoods might be 5 or 10% above where they were before COVID, while other buildings and neighborhoods, even units, are maybe trading right where they were pre-COVID. But I still think there's a lot of opportunity in the market. So with that being said, I'm gonna try to keep this video to 5 minutes. I know I always say that and I always run long, but I'm gonna show you some stats, some specific examples, and we're gonna dive into the rental market as well. The condo rental market right now is absolutely on fire. So with that being said, I'm going to jump over to the computer here and show you my screen. Alrighty, so the first thing that I want to show you guys is this dashboard from Habistat. What it is essentially is you see the bars, those are that's the volume. And the line that we're interested in here, the dotted line, is the percentage of listings selling above asking price, which is a good indicator of how aggressive of a seller's market or a balanced or buyer's market that you're in. So I've already gone ahead and narrowed down purely to condos here and any bedroom type across all of Toronto, right? And this is monthly, this is looking at monthly. So you can see pre-COVID, things were getting very heated. We were seeing 64% of condo listings selling above ask. It was very reminiscent of 2016, 2017, the years that we saw 25, 30% appreciation in the condo segment. And then of course, COVID took the wind out of the sails and we were only seeing 20 to 30% of listings, condo listings selling above ask. At the absolute worst of it, which was the end of last year, early this year, December and January specifically, we were only seeing about 20% of listings selling above asking in the condo space. And then you fast forward to today. Things got very heated in the spring for a little bit, 63% above ask, which was the peak. We were seeing 10, 20 offers on some units. And we're now hovering around 45% sold above ask, which is a very strong seller's market. And part of the reason for that is very little inventory. Now, if I switch from sales to leases, the numbers get even more interesting. So you'll see that pre-COVID, kind of on average, we're trading, 10%, 10 to 15% of leases actually leasing above the asking price. And of course, through COVID, the lease market didn't do so hot. We saw 10 to 20% decline in rental rates in Toronto. And you're seeing maybe 5%, even less than 5% of leases going above asking price. Today, we are seeing almost 30% of condos leasing above the price that they are asking. We're seeing all kinds of crazy anecdotes, right? We're seeing people pay full years up front, 3, 4, 5, 6 offers on condos that are listed for lease when they're only days on market, oftentimes sight unseen. And that's kind of what you see when foreign students return and a lot of people are realizing they moved out of the city, they got to rent something downtown. Whatever the case is, there are a lot of people looking for leases and there's about the regular number of inventory. So you've got twice the volume of actual lease transactions, but the number of lease listings hasn't really changed that much. So the rental market is absolutely on fire. I don't think I've seen anything like this ever before in the rental market in Toronto. I don't think I've ever seen a rental market this hot. Let's dive into some specific sold examples. So first one I want to talk about here is 1080 Bay U condos, right in the Bay Street corridor. This one's a popular high-end building, really good location, obviously very central. This particular unit is a 542 square foot one bedroom, and it sold for $823,000. This same floor plan sold in September of last year for $695,000. So you're talking about over $100,000 increase in price in a very short period of time. Like I said, the condo market is very fragmented, right? 20 Richardson, which is a new building, Daniel's Lighthouse, completed recently, right at Queens Quay and Richardson. 715 square foot, 2 bedroom with parking, sold for $950K, so $1,330 per square foot. 203 College, this brand new building, Theory Condos at College in Beverly. 570 square foot, 1 bed and den with 2 bath, actually a really nice layout. This one sold for $960,000 recently, putting it at just under $1,700 a square foot, which is like New York prices. Incredible, especially for this neighborhood. Very, very high price per square foot. 30 Shorebreeze, all the way over in Humber Bay. You've got a one bedroom with one parking sold for $640,000 recently. So $1,333 per square foot in Humber Bay. Now, Humber Bay has been a very hot market through COVID. It did better than most segments of the condo market. The reason being, obviously, you're close to the water, you're close to a lot of parks, and there's a premium with that extra green space these days. People, work from home and stuff. They're looking for more parks. But it's interesting to me, right? Humber Bay buildings, historically speaking, trade 15-20% less than downtown, and rents are 10% less. But not right now. Right now, a lot of Humber Bay listings are selling $1,200-$1,300 a square foot, especially in the newer buildings. Got a one here at Harbor Plaza, so right in the downtown core, waterfront core, with close connection to the path and obviously a very central building. But pre-COVID, $1,300 a foot maybe is what this building traded at. You've got this unit here, one bed, one bath, zero parking. 528 square feet, sold for $750K, so $1,420 a square foot. You can buy pre-construction in this neighborhood for $1,400 a square foot. Here's another one at Daniel's Lighthouse. This one is a one bedroom, 428 square feet with one parking, and it's sold for $650K recently, so over $1,500 a square foot on the East Harbor front. Finally, 57 St. Joseph, 1000 Bay. Great building, very central. This particular unit, 416 square foot, one bedroom on a low floor, sold for $700,000, which puts it again just shy of $1,700 a square foot. Really, really, really high for Toronto. All right, so this is a chart I forgot to bring up. This is the median one bedroom condo selling price in Toronto. So not a specific neighborhood, we're just looking at Toronto as a whole, all one bedroom condo sales. You can see the dip here, right? What we want to look at is the pre-COVID high, the absolute height of the market, February, March of 2020. The median selling price in February and in March of 2020 for a one-bedroom condo in Toronto was $610,000, the all-time high. And that was with a very frothy seller's market. We're seeing 5, 10, 15 offers on condos. You can see the dip, the absolute bottom of the market, 542, 500. And today we are up to 622, 500. So median selling price pre-COVID, the absolute high, 610 versus 622.5 today. So the condo market has recovered and then some. And then if you were to look at the lease market, generally speaking, we are not back up to all-time highs. I'll show you some lease examples shortly, but the median one-bedroom condo lease price was $2250 at the absolute height of the rental market. Today, we are at $2,050. And at the bottom of the market, we're about $1,750. So we've recovered. We're 2/3 of the way through our rental rate recovery, but the sale price recovery we've already made up for, and then a little extra as well. Jumping back over to specific examples, let's get into the rental market prices. So the rental market is flying, like I said. This is the average days on market, the average time on market that it takes to lease a condo unit. Pre-COVID, 12 to 15 days was the norm. Today we're seeing, or during COVID, we were seeing above a month on average to lease a condo. And you can see it just absolutely plummeting through the summer. Like I said, lease market very hot right now, down to 12 days on market on average. This chart here looks at the average rent for a studio in Toronto. And you can see the bottom of the market, $1,400, right? Today, $1,800. This is the average one bedroom condo rent. So at the bottom of the market, $1,800, today, $2,200. Two bedroom condo rent. So bottom of the market, $2,500, today, $3,100, $3,200. This brings me to back to this chart. So this chart's not updated for July. The numbers would look a little bit different for July or for August for sure, because condos are seeing some inflation in price. But the overwhelming story hasn't changed here, right? Condos in Toronto haven't appreciated. Sure, there are examples. I showed you some examples where specific buildings and specific neighborhoods that are very high demand right now are already 10% above where they ever were pre-COVID. But the broader market as a whole, there are still really good opportunities out there, right? You can still get condos for roughly the same price you would have paid in February and March pre-COVID. What's interesting to me is that all other asset classes, all other types of homes and housing across Ontario has appreciated so rapidly. So for example, you see Oakville condos are up 27%. You see Barrie condos are up 43%. Toronto detached up 15% almost. And Barrie detached up 43%. 3%. So to me, I'm looking at this chart and it's pretty clear to me that, look, the lease market is on fire. We can use that as a indicator, as a leading indicator to tell us people are coming back to the city. I mean, it doesn't take an expert to realize that. You just have to go sit in the traffic on the Gardiner that we haven't had to deal with for over a year. So suddenly people are coming back to the city. They're leasing up condos like crazy. The condo sale market is heating up as well, but the appreciation just hasn't happened yet. So everything else is up 20 to 30%, except for Toronto condos. So logical conclusion, what follows next? Well, you guys can be the judge. Pre-construction launch prices. So what's happening in the pre-construction market? We're seeing higher and higher prices per square foot on new launches. There's a really good reason for this. So Queensway is launching at $11.50 a square foot. Vaughan over $1,200 a foot. Square One over $1,250 per square foot. Jane and Finch at $1,000 a foot. Barry's over $900 a foot. Kingston's launching at $1,000 a foot. North Oakville over $1,000 a square foot. Downtown $1,500 a square foot. Yeah, if not more in some cases. So people have been asking me, do I think some future launches are going to come at lower prices than this? And the answer is no, right? I made this chart a long time ago. I guess not that long ago, 2020. But anyways, this is every launch that happened in Etobicoke over the span of 2 years, or 4 years rather, July 2016 to July of 2020. And I mean, technically not every launch. I'm missing a few from here, but this is the one bedroom selling price per square foot at the platinum pre-public sales, basically the first prices you could have got at any of these projects. You'll note that the prices only go one way. And this has always been the story for pre-construction. Very rarely, if ever, has anybody launched cheaper than the last guy. There's a lot of good reasons for that. During COVID, land prices haven't gone down, right? So you have to keep in mind, like the way a developer prices a project is based on margin. They have to achieve a certain minimum margin, usually 15 or 20%, in order to get the bank to loan them the money to build the building. If they can't build the building, they cancel it. So if they can't get that financing construction, if that margin isn't there and they don't reach their sales target, they just don't build. In order to see that margin, obviously, costs have to be accounted for. The land costs are up. Construction costs are up in a big way. Obviously, materials are up, but labor's up as well. And the actual development charges are going up, as they always do, right? Development charges only go one way in this city. And then, of course, you have inclusionary zoning, which is coming. So including affordable housing in a lot of these, newly launched developments is going to affect the margin at the end of the day. So this is a prime example why, if you're somebody looking to buy into the pre-construction market, waiting until the next launch when there's a ton of excitement and millions of marketing dollars spent on a new launched project tends to be a bad strategy. If you can find something that's available pre-construction today on the market, you're always going to pay less for that product than waiting on the launch. That's just the reality of the situation. Like I said, I see a lot of opportunity in the condo market. We've seen this happen before where detached ran or other types of properties appreciated rapidly and Toronto condos didn't. And what happened? Well, naturally, the next thing that happens is Toronto condos appreciate to make up for the difference. So that's it for today, guys. If you like the video, leave a comment, subscribe, and I will see you guys next week.